stock sectors, cryptocurrencies, and Bitcoin. So this will be something pretty different for me, as I haven't done anything on cryptocurrencies and Bitcoin before, and I rarely stray very far from my normal trading platform that I use. Still, I've gotten many emails from viewers, from members, asking me, when am I going to do analysis on Bitcoin? Does Bitcoin have cycle analysis? And the problem has been that I haven't really found the site that has the proper data, the proper tools, the proper sharing capabilities, all of that, in order to bring this to my regular members. Though I have now found a site that is pretty spectacular when you look at all the features on there, and I'll name that for you in a moment. So normally when I do cycle analysis, I need a lot of data to do the core of the work, which is normally on weekly charts. So I need, like 1.5 or 2 years of data when something is new in order to be able to do that type of analysis. Well, Bitcoin is that old, actually a little bit older. However, the nature of the moves at the very beginning didn't have enough data and were kind of flat, and then all of a sudden it went hyperbolic. And when you get hyperbolic moves in anything, it makes it very difficult to read cyclical patterns. The reason for that is that cycle patterns are measured from low to low. It's the normal rhythms in cyclicality, and so we measure those lengths between bottoms. When you get hyperbolic in nature, it's pretty hard to read the lengths. And the chart I'm going to show you is probably the minimal amount of readable data in order to look at it. But still, I've gotten so many requests, I wanted to bring this to you. And that's why I decided, well, today's the day. What I did was go to a site that I'm partnering with some things on right now called TradingView. It allows me to do, well, almost everything I need to do the chart work. And note, I'm not all as familiar with it as I could be. And it has a huge amount of power to it and many, many features. So I really am going to encourage you to go to tradingview.com and take a look at this. Now, so far, and I think it might be coming at some point, they don't have the ability for me to share charts in any kind of a bulk fashion like I need to do for our members. So I know somebody are going to say, wow, these charts look pretty good. Why aren't I using them for that purpose? Well, maybe down the road, who knows what will happen. But this is an example of a great charting program that is just maybe short of the sharing capability that I need to be able to privately share charts for my members in a bulk way. So let's get into this. What is a Bitcoin? For those of you that are not familiar with it, and I know a lot of people are familiar with it based on it's in the news like crazy, and we know it's a kind of money, but a lot of people really don't understand what Bitcoin is. I actually wrote an article about it in the early stages in 2013 for Trader Planet. And you can go back and search that article and see what I wrote about it. At the time, Bitcoin was, I don't even remember, like $100 or something like that. And there was a question whether it was ever going to be adopted in any real way. Of course, at the time, there were not really any competing cryptocurrencies. And that there was a lot of questions about what the viability was of Bitcoin. Well, there still may be a lot of questions out there, but there's a lot that I can share with you about what this is. So a Bitcoin, or a cryptocurrency, is a network for peer-to-peer transactions. In other words, it's a person-to-person with nothing in the middle. It was created by a group, at least this is the rumor, that they have given a single person name, which is Satoshi Nakamoto. And that, if you look that up, you'll see that, well, I don't think that they really know who the original, if there's a single creator, it was kind of group. It is a worldwide payment system with no intermediary, and no one controls it. So, in other words, there's no central bank control like is being controlled by all the rest of the money. All transactions are recorded on a ledger or a journal called a blockchain. And the blockchain is basically in the genre of the technology called cryptography. So that's where cryptocurrency comes from. It's decentralized. It's not like our central bank is controlling that particular money or any other central bank. It's just this worldwide network. And so there are no regulators to that. Now, that actually might change down the road as governments start to feel like they're being threatened by the capabilities and of cryptocurrencies, and by the potential that it overthrows paper money. As a matter of fact, what's going on right now is apparently a screaming movement away from fiat currencies for specific reasons. It's an electronic currency. It's used to buy things, essentially, or to transfer money, and it's all done electronically. The additional kind of pros to it are that, well, it's anonymous. Nobody knows who you are when you do a transaction on there. You're essentially a number. It's fast. It's cheap. Some cryptocurrencies have no cost. Some have tiny little minuscule costs. And there's, well, massive portability. If you want to move money out of the United States, I think the number is $10,000 now, that, it has to be recorded if you move that kind of money somewhere else. The cryptocurrencies allow you to move money instantaneously in literally unlimited amounts. So if you buy a cryptocurrency in Europe and you want to move the money to the US, you just simply, buy it there and sell it here, and you can go from euros to dollars essentially untraced. That's part of the pros, but it actually fits into the risks and cons. I'll tell you that in a moment, because I'll tell you now. It's like it gives the ability for money laundering, moving money very quickly, and that's been one of the great appeals and why the valuation has gone up the way that it has. It's a digital token. In other words, you don't hold a piece of paper, or you don't hold a piece of money. It's all electronic, and so you still hold it. It still lives in something called a wallet or an account, right? But it's the portability makes it pretty amazing in that you have this digital token which can be moved, without anybody knowing, versus paper money. And we'll talk about Bitcoin specifically. It's limited to 21 million Bitcoin. Now, I'll tell you in a minute how they're created, but there's already over 16 million Bitcoin. So the first like 3/4 of the maximum limit have already been created. The next 5 million or so are going to be much harder, because the way that they're produced gets much harder. So it's limited. It's not like an unlimited amount can be printed like central banks print unlimited amounts of money. The risks are, like I said, governments might get in the way. Right now it's unfettered, but I can't see that they're going to leave it that way. And that may be the reason why Bitcoin can run into some trouble, or cryptocurrencies down the road. There have been hacks early on, and Bitcoin have been stolen. And they fix it and make it better and better security, and maybe there's not that much risk of that right now. The moves have been hyperbolic, and that's a risk. And it's likely that there's going to be a shakeout period or a crash. And adding to that likelihood is that there are now over 100 cryptocurrencies. The top five, I'll name them for you right now. Bitcoin has got almost a $300 billion market cap, come up very quickly in this hyperbolic move. All of them have come up very quickly. Ethereum about 60 billion, Bitcoin Lite 26 billion, Litecoin, which is really Bitcoin Cash is very new, Litecoin 17 billion, and coming up fast is IOTA with about 13 billion. Now they have a slightly different type of technology than the other cryptocurrencies have, and there's some thought that its technology is faster, safer, and may be more quickly adopted worldwide for different functions. So I want to make an important point right here, and that is that cryptocurrencies and the technology that they're built on have to be looked at separately. Cryptocurrency is a form of money. They're created on the technology, and the technology being a blockchain. A blockchain is built essentially by computers solving incredibly difficult problems that are getting harder and harder for them to solve. That each time they're solved, that adds to this blockchain. Blockchain is a register, a journal, a place where records can be kept, and that's why it's so adoptable and adaptable for so many different uses. And I wouldn't be surprised if it's the number one use in 10 years for governments and banks and every other type of big institution that wants to have great, easy, safe place to record all of their transactions, all of their accounts, all of their client holders, all of those things. So that's the direction it's going in. The blockchain technology can thrive while cryptocurrencies can dive. Believe me that they are very separate in that regard. So how do you get value? What is their value in Bitcoin? Why does it have any value whatsoever, and what is it? Well, let's take for example gold. Why does gold have value? Well, it's a shiny, pretty metal once it's refined. There's a limit to the amount of gold that's in the earth, so it's finite. People, have collected it in jewelry, and over thousands of years, it's been perceived to have value. Well, how do you get it? Well, you need manpower to get it. You need machinery to get it. It takes work to get gold. You have to dig it out of the ground, and then it's in raw form, and then you have to refine it. So there's a big expense to taking it out of the ground and refining it and getting it to something that has the appeal for people, and people give it value because they perceive it through all that work and through the uses that they have for it. So you can see, essentially, it's a mind is what it is. When you look at cryptocurrencies, and we'll talk about Bitcoin, it's the same thing. Essentially, people have to get huge computers, and the computing power it takes and the electricity that it takes is massive. That's one of the reasons they believe that Russia might be the biggest competitor for creating cryptocurrencies, is because they have the cheapest electronic grid, or one of them in the world. So you have to have all of this equipment, you have to have the manpower, and it takes the time to solve these massive mathematical problems that they have to solve in order to add to that blockchain. So they mine for it, and when they solve the problem, it goes onto the blockchain. And that essentially, because it takes work, gives it value. Okay, so a cryptocurrency is essentially a measure of electronic work, versus gold being a measure of of physical work. You end up with a product in gold that we have perceived value. And now that I've told you the pros about cryptocurrencies, it has perceived value. So that's why there is value in both gold and value in cryptocurrency. Now, you want to know why gold is drifting lower? It's because cryptocurrency right now is stealing part of the thunder from gold. In other words, there's a different perception right now of what will be a protective place to be against the central banks that are, just wrecking paper money. So that's why there's a perceived value in there. So I hope that was all clear. One other piece to add on is that, while there's 100 plus cryptocurrencies right now, governments are getting on board. There's a lot of plans, and the nature of cryptocurrencies can be changing, and that is they might be commodity backed, and that is, huge problems that have gone on in South America. Venezuela is now planning an oil-backed blockchain currency. So it's a cryptocurrency that will be based on their oil reserves. That's moving towards hard money based on the cryptocurrency technology. And you could be moving that way in a lot of places. Russia also has some whim about doing the same thing. So you can see, with so much competition and variation coming out there, it's likely that this first wave that we're seeing is the beginning of a massive new paradigm. A paradigm that I have struggled to understand, and I think I understand this technology and how this all works. But how it supplants the world that we've lived in now, I don't know that I have a grasp on that. I don't know that anybody really does. But there's something really major here, and it's going to take some giant upheavals and shakeouts, and we'll see down the road what that means to other worldwide markets. But right now, we're just focusing on this massive wave that's going on of this whole new concept of the way that things will be transacted, that records will be kept, that things will be how currencies or money is moved, or things of value are moved across the world, instantaneously. So now let's get to the other part of this, which is people that have been asking me for the analysis on cryptocurrencies or on Bitcoin. I'm going to stick to Bitcoin right now as we look at this analysis, and we're going to be looking at charts that I have, never showed you before. And that is a chart of Bitcoin using this site that I haven't showed you before, TradingView. Again, I want to give them a lot of credit because, man, they have built a site with a ton on there. It gives me the ability to draw a little bit prettier charts than I have before, and you're going to notice that. And again, I'm not going to be able to bring you much on this right now for my members because I just don't have the experience on it, nor does it have the sharing ability that I need. But I think you're going to appreciate this, and you're probably going to go take a peek at this site, which I think is really great and up and coming. So here is the weekly chart on Bitcoin with my variation on cycle analysis on the little bit of data that I have. So here is that chart, and voila, as I unveil it. This is a Bitcoin chart with a little variation on cycle analysis on the work I normally do. So what I'm showing you is two variations right in here. This is the weekly chart. So these are the big cycles in there as they're shown here. And I've shown the minor cycles using the sine wave right in here. I'm going to show you a daily that has a little variation on this also. So that is your big cycle and your, we'll call it minor cycle in there. Now, you can see way back over here, the numbers are so small as you get under 1,000 that it's practically not readable. There's a tiny dip right in here that you can barely see. And then a very visible dip right in here. So you can see that this right in here, is essentially telling you about a large cycle. Note the dip right in here and right in here, and you could see that cycle right in here. The next one is quite visible and quite clear, as you can see, and that is that dip right in here, the rally, and then the dip right here, and then the next big rally. You can see that. This is where it's essentially going hyperbolic from 6,000 to over 19,000, and just an incredible upside move in there. And we are just now about, about 1/3 of the way through these big cycles. Now I want you to notice that there is a very clear smaller cycle that's identified by the sine wave. So it essentially takes this cycle right in here and divides it in half. That's this right in here, and you can follow this cycle here and then this one right in here. That makes it pretty clear. Now, right in here, it's so hyperbolic that the small cycle is basically swamped. You can barely see the dip from here to here, and then it picks up again and then comes down. So it's visible when you see the second half of it there. And where we are right now is the rally, and then probably rolling over into this sell-off. So I'm going to break this down for you on the daily chart also. This big tail looks like a top is made over 19,000. That aligns with the CBOE having brought out their future in Bitcoin. Now, its trading in there is abysmal. It's got 50% margins, and nobody can short it yet. So there's very little use for it at the moment, and I think there's a lot of excitement at that point, and that's why it had that, you can see that big shadow up there. Now, if you look at this cycle right in here, so in other words, there's an important low here, it points out here to end of February, beginning of March for the next low. That would say to me that, well, if you looked at how this was drawn, it would be something like this in here with a correction out to the end of February. The question is, where does that go and what's the shape? If you look at this, you can see that, well, it probably calls for a decline right into here into the end of the year, another rally, and then another decline. So you can see how I extrapolated this movement right in here into a projection right in here. Now, I don't have price points in here, but I happen to have them on the daily chart. So you can see that there's beginning to get some clarity and cyclical movement that is repeating here in the weekly chart. Now, when I switch over to the daily chart, which is right here, you can see, well, there's a lot more information on there. So I have broken down those smaller cycles into very readable patterns that are in here. So again, here is what would be the dominant cycle pattern right in here and right in here. These break down into three pieces. You can see that in the sine waves in here that are giving you the cyclical rhythms. So if I extrapolate from what I see in here, I can show you the big and the small patterns that are very clear. So note this first third right in here. So in other words, this is a harmonic family. It's made up of one larger a cycle shown in this sine wave and three smaller ones in this sine wave. The three smaller ones are quite visible. 1, 2, and 3 right in here. Just beautiful cyclic patterns. If you're an Elliott wave guy, you'd call this a 5-wave pattern right in here. So that's the first one. Here is the second one right in here. You could see very clearly how this is formed, an incredible 5-wave pattern right in there. And where are we right now? Well, again, we're going to keep breaking this down, and you're going to see that, well, this one was in the huge upside move was up, so swamped that you could barely see this dip. So in other words, it's right in here, almost invisible. And when you get invisibility, it's because of the power of the big upward dominant pattern. Here is the next one right in here. There's that peak I showed you on the weekly, and now it's rolling over. So it looks like this is rolling over here into some support point. So in other words, this secondary rally we're in is likely to fail. Now I put in some supports, and you can see we have a little variation in the Fibonacci retracements from the way I illustrate them on other charts, but you can see in here with a lot of clarity. The 38% is right over here at 14,461, right there. The 50% is at 12,708, and the 61.8 is at 11,000. So based on these patterns I'm seeing, here is where that low is perceived to be. So it would call for a decline to, let's be, very conservative, to about 14,400. As you see these over here, I mean, they got down here into the 14,000s also, so that's conservative. You then get another rally and then move down more sharply. That takes you into January, and then there's another harmonic family out over here coming out this way, which gets you out to that weekly cycle low that's end of February, beginning of March. So you can see in here again, I'm just going to walk you through this again, that this 1, 2, and 3 cycles that live within the bigger one are right in here. 1, something like that, right? 2, something like this, right? And 3, something like this right over here. It would probably project down to in the 1200s right over there. If it followed that pattern completely. Remember that this is my first shot and the first identification at cyclical rhythms. These that you are looking at on the daily are classic, and I have a lot more faith in what I'm seeing in here than maybe what I'm seeing in these weekly cycles that are right over here. So you can see that it looks so hyperbolic when you look at the weekly, but when you switch over and look at the daily, it actually looks, amazingly clear. And it looks very much like it's topped to me, and like we're likely to get into this corrective period. And come after the beginning of the year is when I'll probably come back and look and see how it followed these patterns. And if it followed them as I'm looking for. But right now, I would say, based on what I'm looking at, it's pretty clear that the next move is down and somewhere into the mid 1400s that we can see right over here that I'm pointing at that 38%. So you can see that this is cycle analysis that's done on a different site than I normally do. I want to thank TradingView for giving me the permission to show this, and hopefully it's valuable to you in learning a little bit more about what Bitcoin and cryptocurrencies are, and seeing the first charts that I've felt comfortable bringing forward on them, and we'll see where it goes from here as far as how much I'm going to continue covering them. I'm assuming it's going to be more and more, because I'm assuming that the technology is going to catch up to me being able to do some real clear type analysis on it. And down the road soon, I'll do something more about more further understanding on how and where to trade cryptocurrencies. But I'm not going to do that until there is stability in the market and a little bit more depth in the market. I'm not in a hurry to bring more things that are more challenging than we already have in the markets that we look at right now. Of course, you're grown-up people and you're gonna trade, figure it out on your own. But I'm gonna probably wait a little while to get a little more depth before I bring the how to trade and where to trade type answers to a lot of questions that I've been getting. So this is the start of it, and I hope that was a good start, and you'll let me know. That's cryptocurrencies, Bitcoin for right now, and I'll see you in the next segment.